Welcome back to the academy. As you can see on the board, bank reconciliation statement. In our last lecture, we stopped at the cash book, the 3-column cash book. For better understanding of the bank reconciliation statement, we must draw back a little bit to our cash book, because cash book is the continuation of bank reconciliation. So as you can see, in our cash book, the 3-column cash book, let's use the 3-column cash book. We have the discount, allowed column. We have the cash and bank. This is for the debit side. And for the credit side, we have discount received, we have cash and bank. So we have nothing to do with discount and cash. The discount and the cash are accounts or columns maintained by the company. But the bank column for the both side of the cash book are accounts maintained by the bank. We as a company, we are just maintaining this bank column or account for us to know the movement of cash in and out of our bank account without necessarily disturbing the bank for a statement at any time. So in a normal circumstances, the bank column, that is the bank balance in our cash book, and our account balance with the bank supposed to agree with each other. If the bank that we are maintaining, the bank column, we are maintaining this from the account with our bank, does not agree with each other, automatically there is a problem. There is a problem because we are just imitating what is in the bank and what we are having in the cash book. Simple as that. So now, for us to reconcile, there must be a problem. That is, the bank column or balance in our cash book say $20,000 does not balance with our account in the bank say $23,000. So that means there is something hidden somewhere. So in that, we now reconcile the bank column of our cash book with that of the account that we have in the bank, and that is simple as that. So for us to reconcile and come to an agreement with the bank of our cash book and the account that we have in the bank, we must know the reason for the discrepancy. We must know the reason for the disagreement. What are those things that make our cash book bank balances not to tally with that account that we have in the bank? That is simple as that. So in the process of knowing the reason why your bank in the cash book does not agree with the account in the bank, the reconciliation process begins. So let's continue. What are those items? The reason, what are those things that make a bank in the cash book not to be the same with our account in the bank? We have 3 reasons, and the reasons are: 1, items in the bank statement statement, that is our account in the bank. Bank account, bank statement. Items in the bank statement not found in the cash book. So there are items. If you check your bank statement, the items are in that statement, but they are not in the cash book. And as well, if you check your cash book, there are items in the cash book which are not in the bank statement. This is the reason 2. There are items in your cash book that if you cross-check and check very well, are not in your bank statement issued to you by the bank. Number 3, errors. Errors, either from the cash book or errors in the bank statement. So these are the reason, the factors, the items. These are the reason that will make your bank column of the cash book not to tally with your account in the bank. So you begin to identify these items. After identifying this item, then you treat them. After treating them, you arrive at a tallied or agreed balance. Now, let's see these items. I'm going to give you some of the items. This is just a theoretical class on bank reconciliation statement. When we are on the practical class, we will look at the items the more. Now, 1, the items that are in bank statement but not in cash book. 1, bank charges. Bank charges. We all know this. It's a common thing. Bank charges. Bank charges will never be in the cash book. It is bank that knows how to charge you. So it will be in the bank statement and not in the cash book. So it will not agree, the balances will not agree with each other. So this bank charges is same as bank debits. Bank debits. Yes. The second item might be in the bank statement and not in the cash book is the second item is dishonored check. Dishonored check. And we also have standing order. Standing order. We may also have direct credit. Direct credit. So, if you look at these bank charges, I say bank debit. Dishonored check is also called bounced check. Bounced check. So now, what I want you to know is this is at the angle of the bank. Whatever you see here, it is not in the cash book. this is in the bank. So the language of bank is different from the language we use in our cash book. Please listen attentively. As an accountant, you're supposed to know that debit, credit, debit in our cash book is received. You debit what you receive, and in our cash book, credit is what is going out. Now, in the bank, many people get confused whenever they deposit money in their account. They will see credited, credit alert, credited. Why? Whenever they withdrew from their account, withdraw from the account, instead of credit, because they are taking it out, they see debit, debited. This is the language of the bank that I'm telling you. And let me explain it to your understanding. Now, this is the bank. This is the bank. Let's do it like this. This is the bank. So, this bank is playing an agency role. The bank is an agent. Let's take it like that. So, you cannot perform any transaction with your bank account without signaling or contacting your agent, which is the bank. So if you give money to this bank, and that is why we have different banks, if you send money to this bank, you are not sending money to your account, to your bank account. You are not sending money to your bank account. Rather, you are sending money to this bank as an agent. So this bank will send it to your account. They will credit your account. This language is for them, not you. They will credit your account. So whenever you want to take your cash, you talk to them. They will debit. I hope you are getting it. They will receive the cash first before going to you. So the transaction is between the bank and the account. You don't have access directly to the account until this bank. So whatever your account has, you don't have power on it. You don't have control of your account. It is the bank. So if bank put money to your account, if you give them money, they will put it to your account. They will credit your account, and they will, as well, if you want to take, they will debit your account. So in this case, when you put money in your bank account, you will see credit. You will see credit alert. When you put money, you see credit alert. When you withdraw, the bank is withdrawing, is paying you. They debit your account because they are the one receiving, they debit it, not you. They are the one receiving the money. I hope it is clear. So that is why in the bank charges, you say bank debit. These bank charges, they charges you for the account they are maintaining for you. Dishonored check. Dishonored check also is confusing. Why is dishonored check appearing in the bank statement? Why? It is check given to the bank, but the check was not honored. It was rejected as a result of maybe wrong signature or not enough money in the account to fund your account, etc. But why is it that the dishonored check will appear on the bank statement? People also think of this. The reason why the dishonored check appears in your bank statement is one, a customer pays you by check. After paying you by check, it happens that this bank is not the same with yours. Maybe our company or our business is banking with Zenith Bank, and the customer that is paying us with check is with the First Bank. We receive check from this customer and we present it to our bank. The bank will accept this check by crediting our account. After crediting our account, the bank will communicate with First Bank, sending the checks to them for confirmation. Whenever they've confirmed or the process of confirming the check, they notice an error, the wrong signature, debt, not enough fund, they will dishonor the check. So, dishonoring this check, they will now debit your account to cancel that credit that was already made. So, the dishonored check will appear in the bank statement. That is the reason why dishonored check is there. Standing order. This is an order given to the bank to be settling the security in your house every month. So at times when you are preparing the cash book, you will not remember or think that you have ordered the bank to be paying so and so people. So you will not see standing order in the cash book. Direct credit. This direct credit, your customer that is supposed to pay you goes direct to the bank and pay. You should check to the bank to pay to your account. This direct credit, the balance in the bank account will increase, whereby in your cash book you know nothing about the direct credit. So these are the reasons that makes our account in the bank not to balance with our cash book, because these items are not in our cash book. So for us to make our bank balance in the cash book to agree with that of the bank is for you to transfer all these items that were not or that are not in our cash book to our cash book and do the simple arithmetic. When we come to the practical example, you will understand it the more. So items in the cash book, not in the bank statement. Some of the items are: 1, uncredited checks, check. 2, unpresented check. So, uncredited check, we present a check to the bank to credit our account. By that time that we requested for our bank statement, this check was not credited yet. The bank was on the process to credit our account, and we requested for the bank statement, so you will not see the uncredited check in your bank statement. That is simple. This one is self-explanatory. And unpresented check, these are checks that were given to us, checks given to us by the customers. We have entered them into our cash book, but we have not presented them to the bank. So the unpresented check will not be in the bank statement. So to balance this, you take all these items in the cash book to the bank statement. So errors, let's go to the error. Errors in the cash book or in cash book or the bank statement, which is not common. Bank statement. So there might be an error of overstatement of amount, or understatement. So if you overstate your cash book, that is the bank column or balance in the cash book, you overstate it, say with $5,000. So it will never agree with that account in the bank. And if you understate your cash book, that is bank column in the cash book, with $5,000, it will never agree with the account balance in the bank. So if you are preparing, where you overstate, you less. Where you understate, you add. So that is all about the theoretical aspect of bank reconciliation statement. So in our next lecture, we are going to look at the practical aspect of the bank reconciliation statement. So thank you so much. So, and if you are happy, you're enjoying what we're doing, subscribe to our channel, the Icon Success Academy, and click on the notification bell icon that will pop on, and also click on all, so whenever we release our videos, it will come to you. Thank you.